Now let's do the general journal with all the transactions. And obviously I'll start with the balances. The balances, you'll just put them in the general journal as they are. Okay. The first transaction says A. Martins, the owner, took stationery 130 and trading stock 980, and the cost price of that trading stock is 735 for personal use. Now we've done this already. When the owner takes anything for personal use, we debit drawings and we credit whatever the owner took at cost price. So this 865, it's a sum of stationery amounting to 130 plus trading stock amounting to 735. 130 plus 735 will simply give you that 865. Point 2 says J smaller data owing 430 must be written off as irrecoverable. That is bad debts. We debit bad debts, which is an expense, and we credit the name of the debtor, which is J small. Because J small is also a debtor, and he's been credited because he won't be owing us anything anymore, we have to credit our debtors control. AM traders failed to pay the account of 8,820 with number one dealers on time. Interest for 2 months at 10% must be brought into account. Let's calculate that interest quickly first. You will take 8,820 times it by 10% times it by 2 divided by 12. Because that 10% is per annum, that's why we're dividing by 12. It'll give us 147. So that will be interest expense. We will debit interest expense and credit the name of the creditor. And that is because we are going to owe, I think it was number one dealer more because they charged us interest. So you will debit interest expense and then credit number one dealer. And because number one dealer is a creditor, obviously the reason why I'm crediting it is because creditors are liabilities. Liabilities increase on the credit side. It'll also increase creditors' control on the credit side. Next one. Repairs of 20,000 was done to the roof of the building. This was entered in the land and buildings account in error. So we will simply debit repairs and credit land and buildings. We debiting what was supposed to have been debited in the first place, which is repairs. We credit land and building to reduce it because it was erroneously debited. That doesn't affect any debtors control or creditors. The next one. A corner settled his account of 400 after deducting 5% discount. The bank informed AM traders that the client had insufficient funds for honor supposed to say thus payment. The correct entry was made in the cash receipts journal. So we only need to cancel the discount. Cancel the discount allowed, we will simply credit the discount allowed and debit the name of the debtor, which is A corner, because he's going to owe us more due to the discount that was taken because A corner did not settle his account due to insufficient funds. Now, that will also increase our debtors control on the debit side. Discount allowed is an expense. Expense is going down. And expense will go down on the credit side. Next one. R. Lewis, whose account was previously written off as bad debt, returned from overseas and settled his outstanding debt of 1,250. This receipt was entered in the debtors control column of the cash receipts generally in error. Note that when a debtor comes back to pay us, we recognize that as bad debts recovered. So we debit bank, we credit bad debts recovered. But instead of crediting bad debts recovered, we credited R. Lewis. So we need to reverse this by debiting R. Lewis and crediting the correct account, which is bad debts recovered. R. Lewis is a debtor, therefore we'll increase this under debtors control as well. The reason why we cannot credit R. Lewis, even though they've paid, it's because R. Lewis was written off, so it's no longer a debtor. So when we made a mistake by recording it under debtors in the CRJ, because that amount went straight under debtors control on the credit side, but already R. Lewis was not there in the debtors control. So we just reduced debtors control by someone that was not there because we have written R. Lewis off. When they come back, we were supposed to record it under sundry as bad debts recovered. Bad debts recovered is income. It increases on the credit side. R. Lewis will increase, as I've said, on the debit side. This is just to cancel. It's not that R. Lewis is owing us that 1,250. Already, debtors control was reduced by that 1,250. So when you increase it, the net effect will be zero. And the correct account will be credited, which is bad debts recovered. This will increase your debtors control as well. Debtors control added up, creditors credit in your debtors control added up, debit in the creditors control added up, and credit in the creditors control also added up. Okay, try this one. Give yourself around 30 minutes, and these will be your solutions, and mark yourself afterwards. Okay. These are calculations relating to bad debts. Try this one as well. Give yourself around 30 minutes, and we'll discuss the solutions later on in the videos. Kotso.